Well, hello and welcome to the June Wealth Advisory Top 10 Portfolio Extravaganza. I think I say extravaganza every month, don't I? I probably do.
You should if you don't.
Well, because it is. It really is an extravaganza. If you don't know, this is where we select the 10 stocks we like best from the Wealth Advisory portfolio, 10 stocks that we think are going to do the best over the next month. It's definitely a short-term outlook. If you see a stock that doesn't appear on this list, it doesn't mean we don't like it. We get questions sometimes. People are like, why don't you like this stock? We do.
We do.
It's just that sometimes there's immediate catalysts, some kind of news event, an earnings report that we think is going to really boost the stock in the short term. So if you're looking to deploy money, this might be a good thing to pay attention to. If you're wondering if you should sell a stock, this is not the thing to pay attention to, right? Would you say
we're
that?
not selling stocks when they come out of this portfolio. We maintain a long-term view on all of the stocks in the Wealth Advisory model portfolio. We're still bullish on everything that's in there, and when we're not bullish on it, that's when we'll make a sell recommendation.
Neither of us had Invitae last month, I don't think. But yet we like the stock a lot. We're not telling you, we don't think you should sell it. It's a great stock. It should probably be bought, around current levels.
Yeah, or another one, Unity Group. We really like Unity Group. We really think that it's got a lot of potential in the future. But there are other companies that we see, shorter term catalysts coming for.
Indeed.
So that's what we're doing here with the top 10.
And we organize it like a fantasy, sports drafts. We each pick a stock. So we have 5 each, and then we have a little competition. Which I was pretty soundly defeated in this month. But, we're going back and forth because I won last month, you won the month before. So there's no pattern you guys can pick up on. So, you're welcome for that.
Sometimes Brit beats me.
It's completely random. Yeah. I had a really good streak going there for a while, but apparently you learn something.
Sometimes you eat the bear, sometimes the bear eats you.
Oh, I don't want to eat a bear, but I definitely don't want to be eaten by a bear. So if I have a choice, if I have an option, I'll go ahead and just eat the bear. Sounds good.
But so this past month I was the victor.
You were.
We both had some stocks that got hit really hard, but
oh my God, QuantumScape got creamed.
It did.
Absolutely whacked.
It sort of started to climb back up a little bit.
Yeah.
I really like where QuantumScape got to. I'm not happy to see our gains erased or anything.
Yeah, I know.
But this really gives everybody a second chance to invest in
at
this
a nice
company
low price or low
at a much more reasonable valuation.
Dollar cost average or whatever you need to do. It's definitely true. Did you see? I wanted to ask if you saw the Fed news from earlier this week. Did you see what one of the governors said? I think the vice governor, like Powell's direct assistant, there's a vice chair. That's what he is, a vice chair.
Probably, but refresh my memory.
He said that they're probably going to start talking about tapering the monthly asset purchase. I've been writing about this for 2 months in Wealth Daily.
And they've been sort of floating balloons out there here and there.
A little bit.
But it hasn't been anybody quite that high up. It's been, governors, non-voting governors.
The Fed themselves haven't talked about tapering at all. They haven't talked about Yellen was the first one to start talking about that a couple weeks ago. And I wrote about that immediately.
You have a few individual non-voting governors
who
have mentioned, hey, it might be time to start thinking about, talking about, thinking about.
I didn't think they had even
easing back on this.
I thought this was the very first of it.
But this is the first time that somebody that high up that actually has a vote also.
I've been writing for a couple months now that's going to happen, given the, path of growth and inflation. So I'm glad to get a little vindication there at least.
It's always nice.
It's always nice.
It is.
Sometimes nice. And another thing I wanted to bring up is current volatility, right? And I have a thought on this because, we've definitely been seeing some, weakness in the markets lately, and we've also been seeing, some falling volume as well. Daily volume has been on the decline, and some people have been worried. I've read people that are worried about this. They think this is indicates that we're about to have, some real problems. But I have a question. What would you rather be doing after, 18 months of lockup? Right? Stuck in your house, can't go to parties, can't go to the beach and all that. Would you rather sit there and trade stocks from the floor, from your office or wherever? Or would you rather be you know what? I'm going to lighten up my exposure a little bit and I'm going to, take a vacation for a couple weeks. I'm going to take 100%. A month off and roll.
100%. And this is typical of this season. This is typical of the summer.
Always.
All the way back.
But this is going to be more so.
When I first started working in investment banking, when I was at Morgan Stanley, everybody goes on vacation in the summer. All the guys in New York are going out to the Hamptons, or they're going like down to the Caribbean. They're going away. They're taking their family on
this
vacations.
year even more so.
Exactly,
this year even more
because
so.
people didn't get a chance to do any of that stuff last year.
Right.
So
we're
definitely like that's a normal thing to see in the summer.
We are itching for it.
That's part of why there's that adage of sell in May and walk away. It's really, you don't need to sell in May and walk away, but you don't need to expect a lot of, a ton of volume because pretty much everybody's on vacation.
People are itching to get out and about, and so I expect that this, kind of. I don't think we necessarily have any kind of rallies coming just yet. It seems like maybe we should, and it definitely seems like, the trajectory has stopped being like down for the markets in general, but and for tech stocks especially, we've seen a nice recovery in tech stocks. That was on the converse side of people lighting up their positions. If you're short tech stocks, you're going to go ahead and cover and buy a little bit, and we've seen a rally in tech stocks.
Yep.
So I think you've definitely seen, shorts covered in tech.
Definitely.
You've seen longer positions scaled back. And so we're at a kind of stasis point, which I think will last. It probably last through the summer. Like I bet you'll get rallies, we'll get sell-offs. That's going to be the deal. I would advise. Obviously, we're going to still be writing our monthly issues and doing our monthly videos, but we should take some time off too. I think, not be too worried about what stocks do over the next couple of months, because I don't think it's going to be a whole lot. Could be wrong, and of course we'll keep you updated on how we think things are progressing, both in the Wealth Daily free e-letter and in our Monday updates and in our next couple issues of the Wealth Advisory. But I don't see the case for a whole lot upside. I think it's going to come later. If we continue with the kind of growth that we're getting, the kind of earnings growth that we're getting, and stocks don't advance, I think you set up to have actually kind of like attractive looking forward earnings multiples.
Oh, definitely. If they keep
after
consolidating,
a few months,
in a nice tight level, you definitely.
And while we've had
these estimates,
an argument that stocks are overvalued for a while. A few months from now, September, when stocks, well, that's actually usually the most volatile month, but stocks will start to embark on their seasonal upside, their winter upside.
I think so, and a lot of people,
you
are
have a
still
good case
talking
for
about things being overvalued, but a lot of these stocks have gone through corrections, like textbook corrections.
Even though the market's
down
don't show it, right?
10%, down 20%, because it's been individual things. It's not really a market.
Right.
It's a stock picker's environment as opposed to a market buyer's environment.
And a sector picking environment, because tech stocks sell off and materials rally.
Yep.
Oil sells off and something else rallies. It's been a very strange rotation from sector to sector. So you never get overall index weakness, but you have corrections within sectors. It's kind of a masterful job, I like to say, because they've really done well to sort of pair profits across the board, but yet S&P is still right at all-time highs.
Right,
it's
where
pretty
it was.
amazing. Yeah,
It's
pretty amazing stuff.
All right, well, what do you say? Should we get into our picks?
Sure, let's do. Absolutely.
Since I took the W this past month, Brit gets to go first. He's got the option to keep up to three of the 5 stocks he selected last month. I also have that option, so he'll go ahead and
I'm going to tell you all
what
my
his keepers
are, right?
And then we'll come back to me and I'll let you know what I'm keeping, and then we'll get into our new additions.
I mean, my keepers are just easy. I'm sure you can look at them and see. As much as I like, the Aqua Bounty is a little bit of I don't know. I still like it and Rocket, but those are both going. I'm letting them fade. I'm Spotify, QuantumScape, and Qualcomm. Those are fantastic stocks as a sort of a basis for like a longer term portfolio. Obviously, QuantumScape will be a little more speculative, but both Spotify and Qualcomm, I mean, those companies are dialed in their sectors. I don't think you can find much better opportunities and much more solid long-term growth stories than those 2 stocks on the market. I mean, they're among my favorites.
Definitely.
Like kind of ever. They're like, there was a while where I was like Bank of America and Starbucks. Remember that? Like right when I recruited you here, I was Bank of America and Starbucks. It was like the most amazing. They were like typically undervalued, and they had just such
phenomenal
solid
growth.
numbers. Yeah, just solid. There's no way they couldn't grow. You could just look at it and be like, well, how did that not grow? Of course it's going to, and they have. And these are the ones that I like now. So those are my keepers. That was quick too, wasn't it?
QuantumScape was definitely on my list in case you dropped it.
Can't do it.
I really like that one.
Can't have it.
So let's go into we'll go into my keepers here.
All right.
Man, and I'm a little bit torn.
I bet.
I definitely want to keep Albemarle and Innovative Industrial Properties. IIPR is probably going to be in here for a while. Whenever it makes it into my top 10, it stays there for a good long
Seems
time.
like it does,
It is
yeah.
my favorite cannabis stock. It's one of my favorite stocks in general. It's continuing to grow. They're continuing to buy new properties, expand relationships, start new relationships. And banks still won't lend to pot companies.
It's funny.
I mean,
Can't believe
just
it's
great.
lasting this long.
Every time they buy a new property, we get a dividend increase. I think we're making like 25 or 30% in dividends on our original share purchase. So that means even if that stock doesn't move at all,
Right.
those original shares that we bought back in 2017,
Something like that,
2018,
yeah.
those are gaining 25 to 30% a year just from the dividend payment. And like that, I think it's a great example
remarkable.
of what happens when you get in on a dividend grower before it starts growing its dividends.
Well, and that's the thing. That's one of the beautiful things about that recommendation was that you catch a REIT in its early days. Not all REITs will perform this way, but if you find the right ones, you're looking at years of dividend raises. Like that dividend is going to rise.
I think when we first invested in this company, we were getting a little bit over $1 a year per
Right.
share. Now we're getting over $1 per quarter per
Right.
share.
Right.
That's huge.
That's amazing.
That's amazing. That's awesome.
Yeah, it is.
It's staying in there. Albemarle's staying in. Albemarle didn't get me a gain last month, but it didn't really drop that much. It was down about 2%. So I'm going to call that flat.
All right. Well, that's sure we'll call that fine.
But Albemarle has sort of been getting, getting a little bit buzzed up, with all of the talk about, green infrastructure deals and things like that. So a lot of people were speculating on it, and it took some hits. But I think that's going to continue to go. We've got, Republicans and Democrats, Republicans in the White House, negotiating this infrastructure package. Any infrastructure package that comes out is going to involve something, related to green energy.
I mean, sure, but that doesn't even matter, really. The trajectory is in stone at this point for electric cars. I mean, they're going to be bought.
Exactly.
They're going to be produced. They're going to be bought.
And they're going to run on lithium-ion batteries.
Right, and they're
going to run on
They're going to run on
lithium-based
a lithium-based
not necessarily
technology.
lithium-ion, but a lithium-based battery of some sort.
So
And
you have the
Albemarle
miner. I got
is
the
big
battery
one.
company. The
Yep.
one thing we're missing is a manufacturer of cars themselves.
It's true.
But we're not going to do that because that's the low margin part of the biz.
It is, and that's the one where you're really betting on who wins the market. Is it going to be Tesla? Will it be Ford? Will it be Volkswagen?
Exactly.
Doesn't matter. Albemarle is going to get all of their lithium, and QuantumScape's going to make their batteries.
Right. Yeah. True. Good point. Fair point.
So
Love it.
those two I'm definitely keeping, and then I'm a little bit torn because I like At Home Group. It gave me my biggest gain last month.
You can't keep them. They're bought out.
But yeah, exactly.
Why would
They're
you
getting
keep them?
bought
They're not
out.
going
Yeah,
anywhere.
that's
They won't
That's
lose you
Valid
any money.
point, Valid point. So
They
At
won't
Home
lose you any
Group
money.
comes back out, and then I've been thinking about Twilio. Twilio, for a little bit there was down, 25%. It's gone on like a 15 to 17%.
Did it come roaring back or what?
rally
I know.
coming back. And I think that's it got caught being sold with other tech companies that
course.
that had valuations they didn't quite deserve. And
Babes
Twilio-
with the bathwater, Jason.
Exactly, the
Babes
babe
with the
with the
bathwater every time.
Um,
And you called it. We had a subscriber write in at those lows. I think it was down around like 280 or something, and said, "Holy crap, what's going on?" And you were like, "Well, this is a buy opportunity. Obviously.
Yeah.
This is how it's been every single time that the company sells off on some kind of like weak forecast, or, whatever. Like it's not weak. It's just under."
It's just not as big as everybody wanted them
Well,
to
and
be,
it's-
or
I
it's under
can't-
what the analysts were like.
Oh, I
asking
can't think of
for.
the word.
Under
It was under
promising.
promise. That's the one.
No,
That's
Twilio
exactly what I said.
definitely has a track record of that. Under promising and
Under-promised.
over delivering, and that's something I like to do if possible. I like to set deadlines I know
I
I can
always
hit
do
because
it.
then I can get it to you earlier.
I basically
Things
won't
like
agree
that.
to do
I really
anything.
I love that about Twilio's management. So.
I don't agree to do anything. Somebody says, "Can you make this report?" I'm like, "Yeah, probably not. Probably can't
Ask
get that
Jason.
done." So if it gets done, hey, well, I've done really well.
So you know what? Yeah, I'm gonna keep Twilio around. So we're obviously At Home Group is coming out because they got a buyout offer. Now their buyout offer is at about $36 a share, and the company's trading a little bit above that. So there is the potential that the market thinks that maybe they'll get a higher offer. But honestly, I don't think they'll get a higher offer.
Time to bail. It's done.
I think this is a
It's
good
over.
time.
It's over.
We got a nice little gain out of it.
Well done on
and
putting
now
it
they're
in
gonna
your.
get bought.
Well done on choosing it, just ahead of them getting bought out. Like
Right.
We liked the stock, obviously. I don't know that we had mentioned any buyouts on the table. That seemed a little far-fetched, but you still got it. The timing was still very good on that.
They had sort of been getting courted in like late 2019, early 2020.
Really?
I
God.
I can't remember the fund that was courting them, but it didn't pan out.
Right.
But honestly, I wish I could take credit for knowing that this buyout was coming. But that was pure luck right there. I like that home group. I like its business model. I don't blame them for wanting to buy it. And honestly, like even that big premium of $36 a share,
it's not that big of a premium.
Worth more.
Honestly, for our purposes, I was disappointed that it got bought out. I thought you guys were going to make a lot more money on that stock.
No, I definitely think long run, that stock could have been, a $50, $70 stock.
Yep, absolutely.
And I think that the company buying it knows that.
Yeah. Wasn't it a group led by like the CEO or the president or something? Something internal, I'm pretty sure.
It could be. I'm not positive about that. But yeah, I always say I'd rather be lucky than good. I got lucky with that home group last month for sure.
Yeah, we do.
So there's my keepers. We're going to go Albemarle, Innovative Industrial, and Twilio.
All
It took a little bit longer to rock them out than Brit did. But
what's up with that?
Let's get back to Brit.
Circle back. All right, so I'm going to pick the first of my new ones. I only get two. And of course I didn't bring my laptop, so I'm on my stupid phone. So this could take forever. No, I'm just kidding. It won't be that bad. Why don't I just take your laptop?
Well, you could, but then you would see my potential picks here.
Yeah, I don't care what you guys.
I got to delete one of these because it was quantum speed. Bring it back.
Oh, you know what I want to add? I'm gonna add lemonade. That's the one I wanted.
That's a good one. That was definitely one that I was considering.
Yeah.
Lemonade had a pretty big sell off.
Oh my God! It was
the past week.
It was back to our entry.
It started to rally again.
It was back to our entry. It had a really nice broke over its 8-day moving average last week on volume and has and that was at like 71 and it's up in the 80s now. It's like it's cooking. And if you read the issue that we sent out, I have this theory going that I think we're starting to see the emergence of the millennial generation into normal like adulthood, right?
Everybody said we were going to be living in our parents' basements forever.
I know.
We're buying houses. We're having kids.
So
that's
that they
can live in our basements
What's
forever.
funny is that's not the first time I've heard that joke. Today, I mentioned to this guy that he's like kind of a secret home trader guru guy, right? We have a little Slack channel going. We exchange ideas. And I told him about this, and he's like, "Oh, so they're going to move out of their basement." Like he made the exact same joke. It was kind of funny,
but it's true. Millennials are looking for. They're the biggest. They're now the biggest part of the workforce. They're going to be the biggest earners. Because
and they're going to be the biggest inheritors. They're going to be the wealthiest generation.
The biggest inheritors. They talk about how this is going to be the biggest wealth transfer in American history.
Right.
And you're absolutely right.
Yeah.
Millennials are sort of starting to come. Boomers have really run the economy and the market for the last few decades. Yeah. And millennials are sort of stepping up to take that role from their parents.
And I'm ready to stand down, I got to tell you. Even though I'm Gen X, I'm not a boomer, by the way. Even though my kids call me boomer all the time.
Yeah.
If I say anything, they're like, okay, boomer. Yeah. I'm like, oh. If I was a boomer, I'd never mind.
Brit's response would get out of my basement.
Why you kids?
No, I think lemonade's really great. I think that it's I really like how they're shaking up a really stodgy old industry.
Well, that's the thing, and that's kind of the rationale for buying it, and they're shaking it up because of the demands that the new younger generations are putting on the market. They don't want to have an insurance agent. Like I got like birthday cards from the insurance agent.
I used to also.
My parents worked with until I was probably like in my 30s. It was just this routine thing. And we knew him. We went to the pool together. But it was like, this guy, how much did he make off of our paying insurance? Like, he made probably a lot of money. I mean, he did well, right? He did well. And then nobody wants to pay that guy to manage their insurance benefits. It's ridiculous.
Not when you can just hop online and
Right. And so, companies like that, I love the ideas of these newer companies that, are going to be brands for life for this upcoming generation.
Oh, definitely.
It's not everywhere, but there's some spots where you can really see it. I think Lemonade and Spotify, which I kept, I think are two of those companies that really will be like, lifetime brand or brands for life for, these kids for the next, 40 years or whatever.
Certainly,
and that's like, it's a fantastic place to be. And since we're right at the start of that time period, great time to own them. Just a great time to own them. And like have a little buying program for them where you buy a little bit, every month or few weeks or whatever it is.
More.
Yeah. Or anytime they're weak. however you want to look at it. Okay, so there's my my
I think
first.
that's an excellent replacement.
Well, thank you very much, Jason. I appreciate
So
the,
now we're going to come back to me, huh?
It would be your turn, yes. You would be the other person in this
Okay.
little
There's
competition.
nobody else,
So
right?
yeah, no, there is not.
All right, so I've got a few. I have four that I have that I like.
Well, you better pick the right one first, because I'm definitely taking it.
And I got to take
next,
two.
If you
I
don't,
only got two spots to put them in. Honestly, it may end up biting me a little bit this month, but I really want to make clear that I think people should be buying Chewy right now.
okay.
Chewy took a hit. Chewy got dropped down to under $70, and it's because Chewy has been like wrapped up in this stay-at-home trade. But Chewy's
It's
also
kind of ridiculous, though.
That's not really a stay-at-home trade. Like, people weren't just ordering from Chewy because they were stuck at home.
It accelerated growth a little bit,
People
but they're not giving the
don't
growth
just
back.
order from Amazon because they
Right.
can't go to the
Right.
store. They do it because of the convenience. And I really think that Chewy is in like this spot where this is a great place to be invested because it's got a lot of growth ahead of it, like a lot of growth ahead of it. So I'm gonna make Chewy my first replacement.
I thought you said it was going to bite you.
It might.
I thought you meant that you weren't going to take it, and then I was going to, because that's exactly the stock I was thinking about.
Oh, okay.
I was thinking about when I said, if you mess this up, I'm taking it. Because absolutely Chewy.
No, I'm going to keep Chewy. And,
I wanted it to bite you.
It might not have that, it might not have that short-term catalyst that we look for the top tens. But I just really, really, really want people to be buying that. I want everybody to be invested in this company.
It's
this
a
is
great
a
place to
really
be.
great stock, and it's got a lot of potential ahead. So.
And it's one that I mentioned as one of those like brands for life too,
Yep.
because I think it is. I think
Again,
once you
definitely
get
is.
going with Chewy, you're not going to stop. It's going to be very convenient. It's going to be delivered as needed. You'll have a schedule. You can set it up. You don't
it's
ever
great.
have to go buy food again.
No,
and,
I never have to remember to buy food from a
and they're
dog.
gonna
It
have
just gets shipped to me.
and they're gonna have meds
great.
on there soon. So you're gonna have a nice catalyst for both revenue and earnings coming up. And it's almost like I kind of feel like they should have done this by now, but it kind of doesn't really matter because it's coming. So it's like I think the downside is minimal in that stock. And while you said there may not be immediate near-term catalyst for the upside, I seriously think that there's not a lot of downside catalyst. So it's like kind of a good place to put your money.
No, definitely.
Safe place to be building a position, while we wait for
So
this
yeah,
market to
even
kind of
though
turn.
I'm not positive that there's an upside catalyst coming in the short term for it, just to show how serious I am about how much I want people to be owning the stock, I'm adding it to my top 10.
We get it, and now I have to think because I was definitely, which is when the smoke starts coming out of my ears, let me know, and I'll stop thinking so hard because it could get ugly. Not that there's nothing combustible in my head enough to actually catch fire. It's kind of
If you smell toast, let us know also.
it's pretty much dead up there. Well, I could do that. You know what? I said Invite earlier, so I'm going to add that one because that's been sitting by the wayside for a little long, and that run it had. My goodness. It's been cut in half from those highs.
Mm-hmm.
So yeah, that's a great place to be. We love Invite.
Yeah.
We're on our second. We traded it once before. Early on, I think it was one of the earlier stocks when you came aboard.
Yep.
And we made a nice gain on it then, and rebought it.
Yeah.
Down in the
after it
teens
fell some.
again. And yeah, it's been a good move. So.
No, it's been a great one, and we were just talking. We had a company-wide ideas summit this past week, and one of the things that we were talking about was, this genetic mapping and all
Right.
this stuff, and you think about how much Blackstone Group paid for, it was either 23andMe or Ancestry.com, but this is just letting you know whether or not you're related to Charlemagne.
They've got to have
or,
23andMe. Ancestry went to Google, I'm pretty sure.
Okay,
Google's been mapping that.
23andMe. But either way, they're paying billions of dollars for this data, and the data is not as valuable as the data that Invite has.
One of the things that Google's been studying through Ancestry.com, I'm pretty sure this is Ancestry.com, is that is these little pools of like genetic, it's not freaks, but it's like mutations, right? And they found that there's a little pool of Dutch who have this genetic mutation that makes their bones really big and thick, and they get hit by cars and shit, and their bones don't break. Isn't that crazy?
Impressive.
I know. So they're studying these little subgroups and seeing it's going to become a marketable thing at some point, right?
Oh,
like
definitely.
When you have when you go to the doctor and because you find out your wife's pregnant, your women find out they're pregnant, they're going to give you a little menu of shit you can check off. Like, would you like the bone density addition? Would you like the would you like
Would
shrimp?
you like to be able to drop this baby?
Would you like shrimp on that? It's probably going to happen at some point, and then it'll be like
I would
Google
not,
doing it.
I would not be surprised by that at all. Designer babies, it's a questionable thing, and there'll definitely be a lot of debate over it. But I could totally see a company, bringing
Oh, my baby to be 9 foot
like
tall with bat wings. Anyway, I'm sticking with Invitae, and that's going to round out my top 10. QuantumScape. See if I can do it all from memory. QuantumScape, Qualcomm, Invitae, Lemonade, and Spotify.
Yeah.
Pow, nailed them all.
Brain's working overtime.
And those are all, there's nothing like not aggressive in there at all. It's all aggressive.
That's a really
it's all
aggressive
list. Growth. So I could suffer for that. I mean, honestly, I could suffer for that. That could hurt.
It could go either direction.
In the long term, I think it'll be a good move.
In the long term, I think those are all great.
But
buys.
It's really only for a month. So
in the short term, only time will tell. So
Probably
I've got
read the rules
one
of this
last
again.
replacement to make. You remember I dropped Maxar and At Home Group. And I have 3 stocks that I've been thinking about. I really like our newest recommendation, the Bung Limited. I think Bung is a great company. If you look at its chart, it's just sort of constantly growing.
So you're saying you're cornholio,
dividend.
is that right? We're not going any further with that.
No further. I also have Dick's on the list.
I mean, why?
Sorry, I shouldn't put that right underneath Bung Limited, but Dick's just absolutely crushed their earnings. I think they went on like 20-something% rally. And the thing is this is exactly what we were saying back in December when we talked about selling it. Was like, no, this is not a short-term trend.
I was skeptical. You were the one that really stood behind it.
People really rediscovered the outdoors, and this is the place where they're going to get all of that stuff. Dick's stepped up its curbside delivery, stepped up its online presence, its e-commerce segment grew, tons over the past year.
I'm not bored. I don't know why I'm yawning.
And then the last one in there, my choice is Hannon Armstrong. Our new REIT. I really like their sustainable infrastructure. I think we're gonna go with Dick's. Okay. I'm gonna go with Dick's Sporting Goods for my final replacement here. I really like what they did with earnings. They've seen tons of growth. The Sporting Goods
and we don't have to give up that joke either.
And yeah, exactly. We don't have to cut out that joke, so it's perfect. No, I really like them. I think that they're gonna continue to grow. I think that they're gonna have more blowout earnings coming this summer.
I'm not saying anything about that.
And yeah, so I like that. So that's gonna be my top 5. My keepers: Albemarle, IIPR, and Twilio. And then my 2 replacements: Chewy and Dick's Sporting Goods.
I was totally gonna take Chewy too. It's a good one, very good one. Well, there you go. There is our June top 10. I have one thing to announce. As soon as we get done with this, we're going to be filming a little intro for the Wealth Advisor because we're starting to put this stuff up on YouTube. We're gonna have a YouTube channel for the top 10 because. It's time to do that. Mm-hmm. It's just time. There's going to be a delay. You guys are going to get it earlier, probably about a week.
At least a week.
Yeah, and before we put it online, so that we're not, you'll have first dibs on anything that we talk about, and plenty of time to act on it. So we're not going to be undercutting, the value of this for you, but we feel like it could appeal to a larger audience, so we're going to go for it. We're going to see if we can be television or YouTube personalities, influencers. That's what we want to be, right? Influencers. Yeah.
Get paid for existing.
Exactly. That'd be perfect, wouldn't it? Right. Just to sit up here and talk. So there you have it. Anyway, thanks again for tuning in, and we'll talk to you for the July edition. Take care. Thanks.
Have a great month.